Chainlink staking is one of the biggest events in crypto of the year. And in today's show, I want to break down exactly what oracles are, what Chainlink staking means for the future of Chainlink, and look at potentially the next wave of oracles that could benefit off the staking narrative. I want to break down all of the above and more in today's show. Let's get straight into it. So essentially, before we go into Chainlink, before we go into any of the fun stuff to do with some of the other oracles that I am looking at in this market, I want to break down exactly what oracles are, because I do believe oracles are one of the most important pieces of infrastructure which underpin the crypto economy, and they are of utmost importance when it comes to DeFi, when it comes to gaming, and when it comes to enterprise blockchain. So I do want to go down the rabbit hole a little bit and break down exactly what oracles are, what they do, how Chainlink feeds into this, before we look into some of the statistics and the fun stuff regarding staking, which is actually coming out tomorrow. So this video is very relevant at the moment because Chainlink staking early access launches tomorrow, and I do believe that does have big ramifications for the wider spread industry. So what is a blockchain oracle? An oracle is an entity that connects blockchains to external systems, thereby enabling smart contracts to execute based on inputs and outputs from the real world. Oracles provide a way for decentralized Web3 ecosystem to access existing data sources, legacy systems, and advanced computations. There is an analogy that I think is quite good on the Chainlink website, which breaks down in simple terms what an oracle actually is. They say, for example, let's assume Alice and Bob want to bet on the outcome of a sports match. Alice bets $20 on Team A, and Bob bets $20 on Team B, with the $40 total held in escrow by a smart contract. When the game ends, how does the smart contract know whether to release funds to Alice and Bob? The answer is it requires an oracle mechanism to fetch accurate match outcomes off-chain and deliver it to the blockchain in a secure and reliable manner. So the oracle is essentially what is providing the data to the blockchain to execute smart contracts. It's providing the real world data to the blockchain to tell the blockchain whether to execute a smart contract or not, and to what conditions to execute that contract. So oracles are very, very, very important because they are essentially the connecting force of the real world, anything off-chain, anything that's not on the blockchain, to actually bring it and connect it to the blockchain so smart contracts can execute. So oracles are very important in crypto for this reason, because real world events, traditional systems, they need a linking force. They need a way to coordinate to the blockchain from their traditional origins, which is why it's very, very important. But with oracles come a problem, and this problem is specified as the oracle problem. And I'll explain very quickly what this problem is. Oracles have been thought to pose a threat to the immutability of blockchains, because the data obtained through oracles becomes immutable only after it's recorded on the decentralized ledger. This leads us to the question, who authenticates the data provided on-chain? In a nutshell, the oracle problem refers to the conflict between security, authenticity, and trust in third-party oracles for the trustless execution of smart contracts. Oracles retain a high degree of power. The reason they retain a high degree of power is because they are what is providing the input to smart contracts. They are providing the data to smart contracts. And essentially, there's a question that how are they executed if the data determines how smart contracts execute? Because essentially, who authenticates this data? Because you are using a third party. So the immutability of a blockchain is extremely important in crypto. That is because blockchains themselves are providing an immutable decentralized ecosystem for verifying inputs. Whereas oracles, they're using third-party inputs to send to the blockchain. So we do need the inputs to be trustworthy, and we need the inputs also to retain immutability like the blockchains themselves do. But I do believe there are decentralized oracles which could provide a solution to this problem. And that is where Chainlink steps in. Chainlink steps in as a decentralized oracle, which can solve the oracle problem, because the Chainlink network itself does have immutability, and it has an element of trust that potentially you wouldn't get from other forms of oracles which are providing inputs to smart contracts. So decentralized oracles, they use decentralized networks of nodes to obtain real-life data from off-chain sources and transfer that to the smart contracts on-chain. So you're going from a decentralized environment, they're providing inputs to the on-chain side of things, which is also decentralized. So the decentralization is essentially powering decentralization. And that leads me to Chainlink. And I want to go through exactly what Chainlink is and what staking means for the ecosystem. So Chainlink is one of the major decentralized oracles in the space, and the ecosystem is vast. If we look at the dApps that Chainlink is powering, it's powering many of the major DeFi protocols we know and love today. Almost every single major DeFi protocol uses the Chainlink Oracle to provide price feed data to the DeFi dApps themselves. NFT projects as well is another major use case for Chainlink. We have data providers as well, node operators, and gaming and blockchain projects. It powers some of the biggest blockchains in crypto. For example, Polkadot, Ethereum Classic, Chiliz, Matic, the Ethereum network itself uses Chainlink oracles, DeFi, many of the biggest applications in crypto, KyberSwap, Flow. You guys get the drill. Paxos. Paxos is the issuer of the BUSD stablecoin on Binance. Essentially, Chainlink is interacting and related to most of the DeFi ecosystem as a whole, and that is one of the major reasons why it is the major oracle in the crypto space, securing over 225 protocols. If we compare this to the next biggest oracle, which is TWAP, that's securing 65. Pyth is 28. Internal is 26. So Chainlink with a TVL or a TVS, a total value secured of 9.54 billion, comes in well on top as the biggest oracle. And what is the reason for this? Well, because they are powering 3 different sectors. The first sector that they're powering is obviously DeFi, given some of the applications we just looked at before. The second sector they are powering is NFTs and blockchain games. They do so by providing oracle data to the games to provide more of a predictable on-chain experience and a trustless ordering process for these games. And also this can help provide a fair loyalty reward allocation for the distribution of rewards and earning currency in games. And then the third sector that Chainlink is involved in is obviously the enterprise sector, which is Chainlink's vision to become the industry standard middleware for connecting enterprises to the blockchain economy. So if you're an enterprise, so if you're a traditional financial company, or if you are, basically a company that needs crypto data, maybe you're a financial services company and you need blockchain data because maybe you're starting to offer blockchain to clients, maybe you're starting to get more involved in crypto, maybe you're using different cryptocurrency prices to weight against your investment risk management strategies, then obviously you need something to feed that data into your system. A lot of enterprises are now starting to consider oracles like Chainlink to get this data into their systems. And we've seen Chainlink partner with LexisNexis, AccuWeather, T-Systems, so that's for T-Mobile, Swisscom, and Associated Press. I'm sure we'll get many more enterprise partnerships in the future. It's one of the more exciting sectors that I think could be an avenue to growth for Chainlink itself. And I'm going to get into some of the smaller oracles at the end of the show, but I think it's important to talk about Chainlink because they're the biggest one and they're the one that most of us are invested in on a percentage basis. So how to use Chainlink. This is very important. This is essentially the utility of the Chainlink token now. So we know what oracles are now. We know what the Chainlink network aims to do, to be a decentralized oracle to connect the real world to crypto. Now, what is the token used for itself? Well, the Link token itself is an ERC20 token used to pay for services on the Chainlink Oracle network. It essentially powers the architecture of Chainlink itself. Chainlink node operators, and this is very important, use Link as a stake in their network for node operators to deposit Link to demonstrate their commitment for the network and incentivize good service while also ensuring they're penalized for malicious or inaccurate service in the form of losing their staked Link. So this ensures that we have good actors in the space not acting maliciously. Now, requesting contract holders use Link to pay node operators for their work providing the data needed. Prices are set by the Chainlink node operator based on demand for the data they can provide and the current market for that data. Essentially, let me break this down in simpler terms to understand. If you are a project requiring Chainlink's Oracle data, in exchange for receiving that data, you will need to stake or pay in Link as a currency. And as of now, that is the biggest use case for the Link token itself. It's the fact that DeFi applications, as we saw this massive ecosystem, DeFi applications, NFTs, blockchains, gaming, all these projects, they actually need to pay in Link tokens in exchange for receiving Link Oracle data. And that is a major utility of the Chainlink token to this day. Although we did get a major upgrade, which is Chainlink 2.0, which we'll look in at a second, which introduced staking and a whole new set of tokenomics, which I think is pretty bullish for the Chainlink ecosystem long term. But let's just look through the existing tokenomics to verify how things currently look. We saw 30% of the initial Link allocation went to the company, 30% went to the public token sale, and 35% went to the node operators and the ecosystem, meaning Link has a current circulating supply of just over 500 million and a max supply of 1 billion. So it's roughly 50% diluted into the market as a whole. Is that not a high proportion of tokens for the team? Is one of the major questions asked about Chainlink's initial token distribution, given that 30% is given to the project, 35% are pre-mined for rewards and airdrops. Well, the Chainlink team is actually using these funds and operations to bootstrap Link development. Link is sold to facilitate further development of the economy. That kind of adds a little bit of price suppression because they are selling Link onto the market. However, it is important for development to occur that they can fund this development and fund the consistent development of the ecosystem as a whole. So I do think it does raise a question because we're looking at these tokenomics in an unbiased fashion of the constant sell pressure of Link. But at the same time, you kind of have to weigh up in your head whether the excess development or the increased development on the development side outweighs the additional sell pressure, but that is something maybe you need to decide yourself. But I think that most importantly, beyond the initial allocation, it's actually the use case of the Link token itself. And anytime a protocol wishes to utilize the Chainlink Oracle, so any of these protocols, as I just showed before, it must pay the provider in Link tokens. Link is the only payment token for the Oracle with 405,000 paid out in rewards last month. This sounds great, but it also raises the question of whether Oracle providers are likely to sell the tokens to compensate for operation costs. So there is a lot of sell pressure. Let's be honest. There is a lot of sell pressure because you do have even though they're paying in Link, that Link could potentially be sold in the form of Link rewards. And although projects need to pay in Link, the foundation is also constantly selling Link over time. So that does create sell pressure. So obviously the Link team got together and tried to work out a more sustainable model from a long-term perspective of how they can improve the tokenomics and the use case for the Link token. And that ended up resulting in Chainlink 2.0, which is why the price has been running of Link lately, because Chainlink 2.0 really makes a massive impact, in my opinion, for the long-term and sustainability of the Link network itself. So they recently published a 136-page white paper called Chainlink 2.0, the next steps in the evolution of decentralized Oracle networks. This white paper outlines the long-term roadmap for the project. If you have time, I recommend looking at the white paper because it's quite interesting. The update will minimize latencies throughout the Chainlink network and maximize throughputs to optimize scalability, and it will also achieve secure composition of both on-chain and off-chain computational resources into hybrid smart contracts. But I think what caught most people's attention was the revamped tokenomics via linked staking. So as Chainlink continues to evolve, it requires a robust security framework to safeguard the value transferred via oracles in Chainlink-powered applications. Because essentially what Chainlink 2.0 is doing is, I think the easiest way to think about it is Chainlink 2.0 is kind of like an L2 for Chainlink. So you have the major oracle, the Chainlink Oracle providing data to projects, and then you have Chainlink 2.0, which is the decentralized network, which is powering the oracle. And this decentralized network that is being created, that needs to be secured by Chainlink token itself. Like proof of stake networks like Ethereum need to be secured by ETH tokens itself, the Chainlink network needs to be secured by Link tokens. And this is where staking comes in, which is launching tomorrow, to actually help enhanced security and also give the stakers of Link an incentive to stake and hold Link tokens. Because previously, the issue with Link, as we kind of previously discussed, is the only real use case for the Link token is the projects needing to pay in Link, holding Link, paying in Link in order to get Oracle data. However, now with Chainlink 2.0, we have a bit of retail side demand starting to kick in beyond protocol side demand, because now you have a new whole crop of retail which are holding Link, which will now stake Link in order to get a percentage return or rewards per year on their Chainlink tokens. And obviously they're rewarded for securing the network as a reward for staking those tokens itself. So this is the graphic of how Chainlink 2.0 or the staking works. So you have the staking pool, which is the users, likely you guys who hold Link tokens, who want to stake Link tokens into the Chainlink network. Now, the Chainlink network, it gets its money from the dApps. The dApps are the ones paying the fees to the Chainlink network in order to receive Oracle data, as well as Chainlink build feeds if they do want to build on the Chainlink network. The dApps, they earn their money from the users who are getting a service in return. So DeFi, NFTs, Web3, they're paying fees to the dApps, and the dApps are sharing some of those fees to the stakers of Chainlink, as well as to secure the Chainlink network. So it's kind of like a bit of a loop or a flywheel effect, because if we actually break this down to its core, let's just think about this very logically. If Chainlink remains the biggest oracle, as time goes on, and more users use DeFi, as we all expect the crypto market will significantly grow over the next 5 to 10 years, more people will use these dApps. The more people that use dApps, the more fees these dApps accrue. The more fees these dApps accrue, the more revenue sharing fees they are paying to the Chainlink network itself. So Chainlink network, over time, if it retains its status as the biggest oracle and powers most of the crypto economy, it has a direct pathway to revenue as crypto scales. So that's why, in my opinion, if crypto scales, Chainlink long-term should continue to scale, because it essentially is the oracle underpinning all of these dApps and is receiving revenue sharing fees as a reward. And then obviously your staking APRs go up, because if the network is making more revenue, stakers make more money. And if stakers make more money in terms of a percentage amount, then the Chainlink token will go up in price because more people will want to buy Chainlink to stake it. Obviously, this will suppress the staking APR down, but it eventually has to hit an equilibrium point, because there's an APR that the market decides is fair, and that fair point will only be hit once a certain amount of stakers come in, and that obviously would be positive for the Chainlink price, because in this hypothetical scenario of Chainlink's revenue skyrocketing with the rest of the market, then you'd need then the amount of stakers would increase, and therefore the amount of locked Chainlink and holders holding and staking Chainlink would increase. So that's just kind of like the very long-term vision. Obviously, this doesn't happen overnight, but it is, I think, a big improvement, Chainlink 2.0, because it adds this extra dynamic of stakers. We can almost block out, this is kind of what was currently operating. You had the Chainlink network, and the dApps. Now you're adding in this third party, which is the stakers, which adds a very important retail component. So if you do want to stake Chainlink, because I've been seeing a few questions on how to actually stake Chainlink, what you can do is head over to their website, chain.link/economics/staking, click checkout early access, because right now staking is not open to everyone. It's an early access pool, so you need to apply using your wallet. If you're successful, then the V0.1 pool will open after early access opens on December 8th, which is in some countries tomorrow, but in 2 days for the US. So why stake Link? Secure the chain network, earn rewards for doing so, and support the Truth Machine. So that is how you stake Link itself. Now, obviously, since staking has been such a hyped event, it's such an important event from the long-term perspective of the Chainlink network, we've seen VFRs, which are verifiable random function requests, skyrocket. This verifiable random function requests is essentially the amount of requests for the Chainlink Oracle to provide data. So we've seen the demand for Chainlink almost hit its all-time high in the last 6 months. The vast majority of this activity was on Polygon. We know, as per our ecosystem graph here, that Chainlink is one of the major supporters of the Polygon network itself. We've also seen whales actually accumulating Chainlink at record high paces. Whales have accumulated over the last 14 days, $107 million worth of Chainlink at a purchase price of $7.2 per coin. A giant institution accumulated 14.3 from Binance in the past 2 weeks. Then we saw this random wallet address bought another 2.15 million, and then we saw a third address on the same day buy another 504,000. So the whales are starting to pay attention, and they're starting to stack Chainlink. So then the question becomes, should I be stacking Chainlink? If you believe in the vision, well, let's look at some of the TA to underpin what our plan should be going forward in terms of stacking Chainlink. Now, the first chart I want to look at is the daily chart. If we do look at the daily chart, we could see we are currently still in this range, largely range bound. Since we're in the middle of nowhere, if we take kind of a shorter term time horizon, this doesn't personally, obviously this isn't financial advice, but from a personal perspective, doesn't look like the best time to buy. If it was on support at 660, I think that's a great time to buy, and even lower at 580 on the next level of support, that's another great time to buy. But I do also think that since the price has pumped in anticipation of staking, you potentially are buying into a buy the rumor, sell the news event. If that's not the case, and if staking genuinely in the short term has a very, very positive impact, then it's simple. You maybe miss out on a few percent to the upside and wait for a retest and confirmation of this $8 region before going upwards. Because obviously, if that does break, then we are looking at a potential $12 to $13 chain link. So that's the price target in the upper echelon. But in the short term, since we are in kind of no man's land here and are looking to reject on the hourly time frame, maybe right now, today, at this very second, isn't the best time to accumulate Chainlink. If we look at the diagonals here, we can see that Chainlink rejected off this key trend. It was in an uptrend. It tested 3 times on the uptrend and then broke down and had a negative retest on this trend and got rejected to the downside. Its next support looks around 6.6 to $7. That's its next major support zone. So maybe that's a zone you look at accumulating in unless we do get a breakout to the upside, which obviously does have potential to happen post-staking, but I am just wary of buy the rumor, sell the news these days. So if you can't buy Chainlink today, what can you look at? I am looking at some of the other oracles because Chainlink staking has really shone a light on the oracle sector as a whole. And I think a lot of people are starting to now realize the power of oracles. And usually, typically what we see in this market is when we have one leader of a sector that runs, usually the smaller projects in that sector, they tend to run afterwards, just like we saw with the gaming boom, just like we saw with the L1 rotation game, just like we've seen in recent months with different perp dexes, starting with GMX, then GNS, and then Palm, and then some of these smaller ones now on other chains. Typically what happens is you have that front runner and then other altcoins tend to lead behind. So maybe it's an interesting thing to do to look at some of the other oracles and research the other oracles and see if there's potentially any hidden gems in the oracle space that can piggyback off the new renewed interest that Chainlink staking has incentivized and still have upside compared to Chainlink, which is approaching key resistance. Of course, it can break and then we reconsider our thesis, but objectively, it is approaching resistance. So Link is clearly the biggest Oracle project with 1,300 partnerships, but we do have BRY, Band, DIA, AIP3, which are some of the other major oracles. And if we go through CoinGecko and look at the top oracles by market cap, we can see that there are plenty of oracles with very low valuations here. And if they could just get a percentage of Chainlink's total market share, then yes, they could perform quite well. But Chainlink really does have, I wouldn't say the monopoly, but definitely the upper hand right now in this market. But maybe it's worth looking into a couple. A few that I've been researching lately are Band. I think this is one of the more well-known ones that has a market cap of, where is Band sitting right now? Am I blind? Or yeah, it's right here, 252, $83 million. So still pretty reasonable in my opinion, although that has run up in recent times. That's one you can research. It's had a pretty large increase over the past few weeks. Clearly the Chainlink narrative is kind of getting people more interested in some of these other protocols. There's a very good thread here by Look On Chain. If you want to learn more about Band's tokenomics, I highly recommend going through, checking that out if you have time. Another Oracle provider that I'm looking at is API3 DAO. This looks pretty cool because of the way that it is structured with its staking pool, similar to Chainlink. You have its stakers, they stake and earn rewards from some of the dApps. They vote on governance for the protocol. The dApps pay the staking pool back, and as well as using the API. The API providers supply data to the network. So this is quite interesting as well. API 3, I think, has an interesting token economy. So that is potentially one to look at. That's a top 4 Oracle as well at a $100 million market cap. And there's also a few more. If we do look at the DeFi Llama list, we have Pyth internal coming in at 3 and 4, DIA coming in at 6, Tello is another one. So there are a few oracles for you to go and look at. I'm not making a call in today's video because, frankly, right now it's kind of like, in general, we do have markets approaching like short-term resistance. So right in today's video, I'm not necessarily that keen on like aping into any like small caps or anything. But I do think it's interesting to look at because once we get a dip, if we get a general dip on Chainlink, some of these other oracles come down as well. Because of, as I said, what staking has done for the renewed interest in the oracle space, maybe it's worth having a look at some of these, and having a watch list is the least harmful thing you can do. And researching some of these, having them on a watch list of oracles that you like underneath Chainlink, I think that's quite powerful because, as I said, look, Chainlink obviously is the main leader right now, but some of these oracles, they could take a percentage, 2% market share, and then end up growing substantially, given the fact proportionately they're so much smaller than Chainlink. So that's just something to look into. Band API 3 are just two that I am currently researching, but I will maybe add some of these over time to my portfolios. I believe Link's already in my portfolio 1. As you guys know, I'm building DCA portfolios on Nested. I might potentially add some of these. We've had Link actually go up 21% in our Polygon portfolio, which is a huge result for us to make 21%. Since then, I added a large amount of stablecoins to the portfolio because what I'm doing with this portfolio is I'm DCAing in over time. I'm not aping it all in now because it's a bear market, and I think if you run out of cash now, that's very stupid because I still think there'll be great opportunities to accumulate over the next 6 to 12 months, which is why I'm DCAing slowly into this market. So if you copy my nested portfolio, there's a link, first link in the description. You can stay up to date with what I'm DCAing into, and we're going to average into this market and build up some nice portfolios. I've got one on Polygon, one on BNB chain as well. And then this week, I'm also launching an Arbitrum one as well with some of the Arbitrum tokens I've been talking about. But we're going to DCA into these portfolios slowly without being too rash. And clearly, Link is one of them that's performed very, very well. So also, if you do decide to copy and get involved with the portfolios, 2 lucky copiers will win $1,000. Giving those lucky copiers the giveaway rewards either this Friday or next Monday. Depending on how many people we get into the portfolio. I really wanted to do it as a 100 copiers reward, and I think we've got 85 right now. So when we get 15 more copies, then I'll give away the $2,000 to the copiers. If you don't want to buy spot and DCA into the spot market, we also have an option to trade on perpetual dexes. I am looking at, I'll just show you my charts just very quickly. This is kind of generally what I'm looking at in terms of the Bitcoin price. Once again, I'm not an expert trader, of course, but I do a little bit of TA. And what I'm looking at in Ethereum in general right now is this $1,300 zone being obviously key resistance. So that is a zone that I'm looking at shorting, to be completely honest. If we do break above this line here, potentially it's a nice short from the $1,300 region. Bitcoin as well, looking very similar in its pattern. It looks like there's a lot of resistance around the 17,300 region. That would also be an area that I'll look to short. If it breaks through, that's fine. We'll set our stop losses tight, and then we'll long another altcoin from the stop loss zone, because that'll give us exposure to the upside without losing too much. I think our stops will be around 7%. So if you are looking for a trade, that's one that could play out over the next few days. And if you do want to trade, you can do so on Apex. Link in the description. It's a decentralized exchange, which basically allows you to not KYC, but also keep custody of your own assets. It's powered by ZK Rollup, so it's very fast, secure, high performance, and after what's happened to FTX and a lot of centralized entities recently, trading on a DEX can alleviate some of the security concerns that centralized exchanges have shown to have recently. So trade on Apex if you want to open that trade. But that's just what I'm looking at in terms of the trading, the charts in general in the near future. So I hope you enjoyed this video on Chainlink. I am going live on my Instagram right now to discuss it further. So we can have a chat there, hang out, have a little bit of a Q&A sesh. You can ask any questions you want about the market, and we will head over there. There's a link in the description to get on the Instagram and ask any questions you may have. Until the next video, I will see you tomorrow, where we are discussing, I believe, Arbitrum, unless there's some other major news that breaks. That's going to be a great video. We're going to be talking about the Arbitrum ecosystem and the best way to gain some exposure ahead of the Arbitrum airdrop. So until tomorrow, 7 p.m. EST, I'll see you later. Peace out. What's up?